This is the Stay-at-Home Bookkeeper Podcast, where we do real talk, where we share real stories. We're going to share real struggles and real success with people that are actually doing the business, freedom-based businesses. And so you're in for a treat today. We have my dear friend, AJ Yolofsky here. Hey, AJ, how are you?
Good, Deanna. Hey, Bill. Thank you so much for having me here today.
So let's kick things off. AJ, Tell us what it is that you do.
So I am a business and estate planning attorney based in Fort Lauderdale. I work nationally. And here's the thing is that what I do is I help people like you, people like your members and their clients really leverage the wealth that you're creating inside your business, like get you to use it and enjoy it during your lifetime, because people hear estate planning and they're like, oh, pushing daisies. And it's nothing like that. This is a great way to do foundation, right? To build everybody needs an estate plan. It's build a foundation that you can then work off of during your lifetime and really enjoy. And I know a little bit about your family, right? And how much more fun is it? And if you're not following Deanna on social media, you'll see some really cool stuff. I'm sorry, what was her name yesterday?
Hey, our granddaughter.
Right, but you had another name for her. You had a nickname for her that is escaping me right now.
I call her my peanut.
It might be, whatever it was, and this is the whole reason that we're in business on our own, right? Is to get that freedom in our life and use the number one commodity, most valuable commodity we have, which is time. And so the work I do is I help you focus on what you're doing in your business while we're taking care of your wealth. We're making sure that you're not paying too much in taxes. We're making sure that we're thinking 2, 3, 5 steps ahead so that your legacy goes the way you want it to, and ultimately that you exit on the terms you want.
So let's break that down just a little bit.
Sure.
Like, I know you just kind of glossed over it, but let's break it down. What does that actually mean for the small business owner here?
Okay.
How can you help them?
So let's start with structure, right? And as I understand it, correct me wherever I'm wrong, as I understand about Stay-at-Home Bookkeeper, right? It's there was at least a portion of it that was like, hey, do this as an extra, do this as an add-on, right? And what are you doing, right? What are you doing? You're entering into one of the most trusted positions that any business owner can have. You're getting literally the keys to the kingdom, or the passwords to the bank accounts and the payroll, right? And these things. So you're immediately elevated into this position of trust with your client. Well, what have you done to protect yourself? Right? Many people who go into business on their own, they're like, oh, hey, I'm just going to set up shop. And we know about the concepts of minimum viable product, right? MVP. Let me just get out there to market, start getting clients, and I'll forget about the rest. And we can talk some of the technical things that are going to come through with this. Like, for example, when do I become an S Corp? Right? What's the threshold for that? Or, hey, when I talk to people like, oh, yeah, you have a business. Oh, yeah, I have an S Corp. Okay, that's a tax structure. But what are you operating as? Are you operating as a corporation? Are you operating as an LLC? What happens if you can't? What if you're on vacation? What happens if you become incapacitated? What happens if you want to sell? Oh, wait, what if you get divorced? Oh, wait, hey, it's my business partner and me. Okay, and how do you make decisions? Well, we do everything 50-50. I had people, years ago, I had these two guys come into my office and I said, okay, how do you make decisions? Well, we agree on everything. And that got really, and for those of you that are just listening, I kind of cocked my head to the side with this. Are you kidding me? Whoops, bleep, right? Are you kidding me? Because there's no such thing. You don't always agree on everything. And so on the structure side is, if you put a structure in place, if you put some things in place, and it's a difference. We can kind of think about the 3 little pigs for a second, right? Are you building your house out of straw, right? Are you building your house out of wood? Or are you building your house out of bricks? Are you building your business on a strong foundation? Because so many things start there. And how many times, as the new bookkeeper, have you jumped in and go, what the is going on here? Because the business owner themselves, they don't know what's going on. And so when we put some structure in place and then that you follow that structure, now you're able to leverage that. These are the business things. This is my business. These are the personal things. And we talk about, I'll fold in something like a tax deduction, for example, right? And we see all this really horrible information out there in social media world because it's a quarter of what actually needs to get talked about. For example, big thing going on these days, talking about the Augusta rule, right? For those of you who are unaware, it's the ability to rent out your home for 14 days a year, tax-free. It's tax-free income, right? So if you have the business, you can rent out your own home. But if you're a sole proprietor, if it's just your side hustle, you can't. There's no separation. And so there's a whole bunch of detail and documentation and strategy. And by the way, the IRS is starting to pay attention to this because there are so many influencers talking about it. Documentation is necessary. That's one way we help. Then from there, as you're building that wealth, how are you going to pass it on? How are you going to do it? Right? What's the statistic? Like, I forget, like it's a very small statistic of people that successfully exit their businesses. If you're starting right now, if you're starting now and getting it right, getting things done correctly now, you're able to do a better exit later. And so the same things for your membership, same things for the bookkeepers. If you really understand how this works for yourself, you've just made yourself a force multiplier for your clients.
Yeah, I was just going to say that. I was like, it's not just about you as the bookkeeper yourself in your business. Knowing this and being able to apply this to your clients is a powerful tool to have in your tool belt, right?
It's immense. It is an immense, because my clients, my relationships are screaming. Their number one question to me is, I think I need a new CPA. I think I need a new bookkeeper. The two work hand in hand, right? The two truly work hand in hand. And because as a bookkeeper, as a controller, whatever it is, you're on the front line of getting that business's financial reporting in place. And I say this to my CPA friends too. I say, look, you guys are the Pulitzer Prize winning journalists of the financial world. Very few of them are making the news. They're very good at reporting it, but at making the news, they're not so much there. And if you're able to, on that line, being that frontline person inside the business where you have this trust from your client to help them make strategic decisions that help them grow their business, you're also going to grow your business. When you grow your business and you create this wealth, how do you protect it? How do you minimize the amount of taxes that you're paying? How do you find new ways to branch out? What's the structure that it's operating in? Right? Because we see people do things like, oh yeah, I made this extra money. And they don't quite say it this way. I made this extra money, so I'm going to buy this investment property. Okay, great. And then something goes sideways with one of your clients. They come to you and they say, hey, you screwed up. If you're operating as a sole proprietor, then everything's exposed, right? The basic asset protection level of it. If you even have, we see this a lot, and you may see it with those of you listening, you may see this with some of your clients where they're using their company as a personal piggy bank. It's the same problem. Then all of a sudden, that thing that went wrong with a client, and they get a judgment against you, and then they go reach into that investment property to pull the value back, to get their compensation back, because you haven't been following formalities. So these things that I do for clients, right? What do? I help people save $20,000, $30,000, $50,000 a year in income taxes. Put it back in their pocket through.
It's just a little bit of money, by the way.
It's just a little bit, right? It's just a little bit. And it's something that when we look at the tax code, when we run the analysis, it's like, hey, this is sitting right here. Do you want it? Or do you want Uncle Sam to have it? Or your state tax authority to have it? Right? So I look at this as way back when I was a commercial litigator, right? I've been an attorney for over 20 years. I was a commercial litigator Before that, US Marine. I've been in the ideas of resolving conflict through, let's call it direct means, and for a long time. Great way to start from a lifestyle, from a life experience, kind of like, how do I want to live my life? It's really difficult and stressful to come into that every day where everybody is your adversary. And one of the things from commercial litigation was, did anybody win? Did I necessarily help someone? I don't know, right? Here, I can point to tangible outcomes, and I can go back and say, or clients come to me and they say, thank you so much. Our life is better because. And that's just a far better way to live. So we really look at it, the legal work that we do helps people out, but we're really getting to helping people develop their legacies.
So what are some of the most common mistakes people are making when they reach out to you and when you engage with them as new business owners or as business owners? Right. What are some of the common mistakes that you're seeing?
One of the most common mistakes right now is, well, ChatGPT told me I could do this.
We're laughing because we've experienced that just recently.
And it's going to continue to come up, right? And really quickly, AI, super helpful. If you're using AI, wonderful. You're getting, in my world, you're getting anywhere from 60 to 80% of the solution based on what your topic is. And the reality is that it's that remaining portion that it doesn't cover that's going to screw you over, and probably the same in your world. Ultimately, what makes that a big problem is that it misses the human interaction, right? You have kids, you have grandkids, you know from being parents that you had to parent your children different ways. Each child required a little bit of a different thing. Well, that happens in the business world too. So that's number one. Number two, big one, is people who just, oh, my accountant said they'll set up my company. Okay, great. You know what? I'm going to do your partnership tax return. What do you think? And for those of you who are new here, partnership tax is one of the most challenging types of tax returns to complete, probably only seconded by an estate tax return, right? And like, partnership tax is just fun because why? It's part sorcery. And I'm sure like I've probably like watched one of your more experienced people coming, one of your members from a more experienced area, or anyone who's been in CPA world, they're like, it's not sorcery. There are rules. Of course there are rules, but there's so much flexibility built into partnership tax that we can really do some cool things in collaboration. And so the third thing that the most common thing is that it's communicating the value of the advisory service on the front end. And what I mean there is, I used to say, from being a commercial litigator, there was an old ESPN show, I'm not sure if it's still around anymore, 30 for 30, right? And it was the same thing in the legal world, which is you can do it right on the front end, or, and this was back when I was a commercial litigator, or if you don't come to me on the front end to get things set up correctly, then hey, we'll go to court to solve the problem. That's going to take about 30 months in the court system anywhere in the country, unless you're in some small remote county somewhere, but even then. And it's going to cost you probably about 30 times as much to resolve.
Yeah.
Litigation rates are obscene. For anybody involved in that, unless you're doing the forensic accounting as a consultant for it, stay out of litigation. And so talking to clients and saying, hey, it makes more sense for you to spend $5,000, $10,000, $15,000 on the front end to get everything set up correctly, to get those advisors around you and working with you, and you, all your members, you're one of those strategic advisors. And so explaining to clients the value, because sometimes it's hard to, how do you see the value in a binder, in a binder of papers? How do you necessarily see the value in a bunch of PDFs? But when that PDF stack is the ultimate defense to a tax audit, to a lawsuit, to intra-family strife, right? I remember taking the deposition of this very high net worth, third generation individual who really screwed a client of mine over. And there was a lawsuit from his aunt against his father. And I brought it up. And it was like the ice wall went up. He was like, she's not Aunt Jane. She is Miss So-and-so. And it wasn't even the family name. So keeping you out of this stuff. Those are 3 things. So ChatGPT, 2, somebody else signing it up, and 3, communicating the value of the investment.
That's very good.
So what, most of our academy students and those deciding to join the academy, looking into starting a business,
Listening here.
or listening here, what, if you had to give one of the best pieces of advice to someone new starting a business or someone new in business, what would that piece of advice be?
Okay, so there'll be 2. Number 1, do it. Stop thinking. Stop thinking. Okay, stop thinking and start doing. One of my favorite authors, Tim Grover, right? If you're familiar with him, you will be hanging out with me. Us talking, you'll hear a lot more about Tim Grover. Great story. I'll leave that alone. But I reread 2 of his. He has 2 books, Relentless and Winning. I read them both every year, at least once. And I'm in the chapter right now where is the glass half full? Is the glass half empty? Who cares? You like what's in the glass, get more of it. You don't like what's in the glass, pour it out and start over.
I love it.
Right? So do it. Because owning your own business gives you such a different perspective on everything in life. Right? I love it. I've had my own law firm for 11 years. We've had our ups, we've had our downs, we've had our crazy, and I absolutely love it. So that's number 1. Number 2 is you have this huge network of people around you. Get over yourself, ask for help, network, connect. You've got great, I'm sorry, I'll pump you guys up. You've got great mentors here, right? Get connected, get involved, ask the questions, know what you do, and then outsource everything else. So if you're familiar, and this is great advice for your client, for your members' clients also, right? Great book. I'm a big reader. So that always comes up in my conversations. Great book to read, Buy Back Your Time, Dan Martell. And practice. As soon as you hit a level of something, buy that time back and get back to doing what you're best at.
I love that.
That's such great feedback, and definitely going to get those books. So I guess the question would be, just do it. Let's start there.
Yeah.
And then let's just say they want to work with someone like you. What are the next steps for someone like that?
So for one of the things for working with someone like me is fit is incredibly important, right? Just the same way as you're screening, as each of your members, as you're screening your clients. In this position of trust, there has to be this mutual relationship. One of my best clients, I've been working with him in his business for about 8 years. He is, and I'll cover this in just, there's a side note here. Please don't let me forget about categories of wealth. He is right at the ultra high net worth range. And you think, oh, wow, what a great client to have, right? Okay, he's challenging, wonderful. And the thing I love about him is not the fees he pays me. What I love about him, he's self-made, barely a high school education, is he has several advisors around him. I'm the outside advisor, or one of them. He solicits my advice, and then he decides what he wants to do with it. And even when he's rejected me out of turn and said, nope, we're not going to do that, we're going to do it this way, it's always he allows for that advice to come in. And this is the type of relationship you want to have. You want to have it where an attorney especially, right? You as bookkeepers, controllers especially, should never be yes people. Should always be, I'm going to give you the honest feedback. I'm going to give you my honest recommendation. If you choose to act on it, great. If you choose to ignore it, also great. By the way, write that memo to the record. Okay. And go out and find that. So when you're interviewing someone like me, and by the way, if we want to put together, we can probably put together a quick list of like what to look for, what questions to ask.
That'd be great.
Type 1 sheet, right? Is things like, well, are you a transactional? And that's going to mean something to an attorney, right? Thinking about deal documents or estate plans? Or are you a relationship practice? I'm a relationship practice, flat out. I have people clients ask me, they're like, well, what do you charge? What would you charge for this? Because I'm doing like some complex plan, and they're asking me the question of like, what if I need a name change? What if I need a document change? What if I have a quick question? And I say to them, you just have to trust me on this because it's a bit subjective. Look, if it's something that we can handle very quickly or it's a routine type of thing for us, because of the nature of the relationship, don't worry about it. And you have to take that rider. Flat fees are far better than hourly fees. Certain practice areas you can own because of bar rules here in Florida, for example, they can only charge by the hour. But in my world, in the estate planning world, in the business planning world, there is no reason to have open-ended hourly fees unless that's what the client wants. So flat fees, scopes of work. People are typically hesitant to ask an attorney, well, what are you going to do for me? Right? What's the game plan? And so when you're setting up your business, there's an enormous amount that can be done DIY, and that's okay. I know what I said before. But talk to an attorney to say, hey, I'm looking for a strategic advisor. I can do a lot myself. I need you to backstop me. How could we do that? Hey, you know what? I have an entry level, and there are attorneys like this around the country where, hey, I have a business startup advisory level, which is $500 a month. And you can ask me whatever you want. Here's the scope. Here's what I do. Here's what I don't. I have a higher tier. I have a third tier. I have a multi-member business. I get people who come in. I have a case right now. These two guys, they each have their own business, and they're coming together to do a joint venture. And I said, okay. And we hashed it out. I said, here's your price. They asked me, well, what's the hourly? There is no hourly.
That's great. Right? That's awesome.
So these are some important things. Before I forget, before we jump to the next topic, let me talk about wealth levels very quickly.
I was going to say categories of wealth.
Yeah, categories of wealth. Perfect. So right now we are in the estate tax exemption amount is $15 million per person. So $30 million per married couple allows for anything above that amount. This is federal law. I'm not talking state law. Above that amount, the estate tax kicks in at 40% of the estate. Below 30 million, it's exempt. So that's opened up. It's opened up some different classes of estate tax planning and whatnot, but categories of wealth and where the opportunities are. What this high tax exemption means is that the concepts of mass affluent, for example. Now I define mass affluent. You'll see it in different reference points. Anything up to about $10 million in total household net worth. That's mass affluent. You're doing well. You're living a really good life. But on the grand category of wealth, you're just part of that mass affluent. There's nothing wrong with that. It's a great place to be. Mass affluent. There's an enormous amount of households and business owners that sit in this category, and they are by far the most underserved, especially for law. Why? Because in law, the two where people compete from my field, where people typically try to compete, is they're doing the W-2 401k, I own my house clients, like probably sub 1 million total household net worth, and they're doing a volume practice, or they're positioning into the high net worth space or the ultra high net worth space, which I'll explain in a second, and they want to try and get that work. But that big middle that I'm explaining right now, starting with mass affluent, 1 to 10 million, there's about probably 10 million households in the United States right now that qualify in that space. And they need that strategic advisory service on a fractional basis. Second category, affluent, 10 million to 30 million, right to the exemption amount. Again, millions of households, businesses in the United States in this spot, underserved from the legal perspective because of where people are positioned. Similarly, with bookkeepers, controllers, right there, it's an opportunity to jump in. High net worth, 30 to 100 million. Mostly self-made people, some inherited wealth, not a lot. People post-exit. These are people who are going to have an estate tax challenge at some point in their, because the wealth is going to grow unless they try to do a Brewster's Millions and spend it all, right? Their wealth is going to grow faster than the tax exemption, which is indexed for inflation, is going to grow year to year. So there's great planning opportunities there. Ultra high net worth, 100 million and above. The strategies, relatively speaking, are the same. However, the numbers just get bigger. And then also the diversity of the assets gets bigger. So where I am, I'm positioned best. My firm is built for mass affluent, and we do high net worth planning too. So once we get into that, I typically hand those clients off. And that's part of the setup, right? We help build a business, and we exit to a roll-up. We exit to private equity, and we move on. And then we go back to building another business and do the same thing. And so as part of when I'm brought in and I'm assembling that strategic advisory team, right? Whether it's CPA, getting the right bookkeeper, fractional CFO in place, insurance advisor, financial advisor, getting this group together. Typically I'm working with people who are, hey, we're going to help you build to this exit point, sell the business, and now we'll work on what's next for you, the business owner.
And I love that you said that, because I'd love for us to kind of focus on that here as we end today, is that really, whether you're just now getting started or whether you are working with clients that are in that affluent, state, it's important to build a team, a wealth team that's helping them get, and whether you're doing it or whether you're bringing in someone like you that's helping that, you're bringing so much more value to your clients by being able to do that. So, where do you see the mistake of people not bringing you in? Is it because they wait too late, or do you feel like they should be bringing you in from the beginning, or give some advice to people listening here today?
Sure. So people, like everybody, we're all hesitant to admit we don't know something, right? We all have to worry about sometimes. And I had this happen to me. I had an international tax issue about 10 years ago. I brought in a guy who is phenomenal into the international tax world, and then he took my client. Now, I'm not heartbroken about it because I needed to fire that client anyway, but that really kind of sucked, right? And so
is it the fear you're saying? They don't want to bring someone else in? Okay.
Fear is what it is, right? And that really, for a period of time, that instilled in me this fear of bringing someone in, right? And we didn't have chat then, but we had Google, and I had a library, and I could go research, but I would still be hesitant to bring in that other perspective. And there's so much overlap, right? The CPAs, the accounting folks, the bookkeepers, something about what I do. I know something about what you do. I don't want to be made to look like a moron in front of a client, right? And then reputation is a big one. If you bring someone in and they're the wrong person, oops, and that gets ugly. My thing is typically, and this is something out of the Exit Planning Institute, and also like great book, Built to Sell, John Warrillow, if you're familiar with that one, right? For those of you, read it, read that book and now apply that to your clients. Warrillow gave a presentation at last year's Exit Planning Summit where he talked about that the number one advisor that business owners go to for strategic advice is their accountant. And I would say, knowing what I know about who that is, it should really be their bookkeeper, because that's the one who they're talking to. The accountants just don't talk to people year in, year out. They talk to them briefly during tax season. So bring people in. Admit to yourself, hey, I don't know that, but I know who to call. And that is huge. I'm seeing more for where I'm positioned now. I'm seeing fewer and fewer pure startups. I'm seeing more mature businesses that are coming to me. And they're the ones who have been out with that product that are now thinking about what their next is, whatever that's defined. And that's where they start talking to us. Or we're brought in by the other advisors. There's some strategic advisor already on the team, and that person has said, hey, we need to bring in this expert.
No, I love that. And I love how you said earlier that, you can either invest up front or invest a whole lot more on the back end when you're not done. I was listening to one of our managers at one of our auto shops tell a customer that, when a customer said, well, I think I'm going to go try to fix that myself. I think I can save a lot of money if I fix it myself. And he's like, well, I really have two prices. I have a price. This is my price for if we fix it for you now. And this is our price that when you have to bring it back because you messed it up, this is our price when you have to bring it back to her. Which one works best for you?
That's absolutely brilliant. And it's absolutely correct. It's absolutely correct. I've had in as far as I know, in the years that I've been writing operating agreements for LLCs, only one has ever ended up in court. And it's only because the client made modifications to the agreement after I had provided it to them.
There you go.
Only one. And what was even better was I got approached last year. I did a really cool setup. And this is a typical one. So you have the doer, the marketer, and the investor coming together, right? See this a lot. So I had these guys come and they're like, oh, we've already prepared an agreement. We'd like you to look it over, whatever. I'm like, well, I don't do that. Right? It'll be a start. I can use it as a term sheet, but I write my own agreements. They're like, okay, that works for us. These guys were fairly sophisticated. And so they send me the agreement. And one of the things I almost always automatically go to, right? If you're not doing this, is a little cheat, little hack, which is go to, whether it's Word, Excel, PDF, whatever, go to that properties box, file menu, properties, go in there and creep around what the document properties are. You find out some really interesting information. Well, what I found when I looked at this operating agreement, it was one of mine. They sent me back my own agreement. I've never heard of these guys before. I don't know where this was floating around, but somehow or other, my agreements are starting to make it around. And I was like, I told them that and they laughed. And
now
like,
you made it.
Can we get a discount? And I was like, no. And the reason was, it was really simple. Why? They were setting up something here in Florida that was actually going to operate overseas. And so we had to do this, a whole separate issue unrelated to the actual drafting of the agreement.
Well, we're going to end with that. Like, I'm going to state what AJ just said. Just do it. One, whether you're getting started or not, just do it. If you are working with clients that could use help, don't be afraid to have someone like AJ in your pocket that you can bring on. Just do it, right? Like, you should really always be scaling and adding people to your advisory team that's going to make your clients more money, because that makes you look good. And that's where I will put my reputation on stage and say, AJ is one of the best out there. Like, he's incredible.
Thank you.
You guys do not talk to him. I don't know why. I don't know if we can help you there. Like, you should be talking to AJ. Also, if you're on our investor cruise, he will be a speaker there next month. Super exciting because AJ is.
Thank you, Deanna. Quick preview on that. Please come to the cruise. It's going to be a lot of fun. I'm giving 3 presentations. And so it's estate planning for business owners, number 1. Number 2 is going to be asset protection, which is a big one. We're going to cover some of the topics that are out, many of the topics that are out there and how to do it correctly. And then third, I'm going to be talking about sort of tax basics for the non-financial, non-legal business owner. Everything is about like giving value, adding value, everything else. And so just to invite your members to take some action, to do it now. Surprise, Deanna, you didn't know this is coming. So but here's what it is that if in the next 30 days from when this is dropped, when this podcast goes live, if you call into my firm, you'll talk to Anna or Veronica. Okay. And you say, hey, I heard this on the Stay-at-Home Bookkeeper podcast with Bill and Deanna. I'm one of their members. And I know that the code word is going to be cupcake.
Oh,
okay. You must identify it as such, and you must use the magic word. Please do not put that into anything, but it's got to be in the next 30 days after the podcast drops. And I will jump on a call with you to help vet out what you want to do, whether it's with your business or to do your strategic, how to interview lawyers or whatever it is we put together. You get 15 minutes with me gratis. And by the way, just for some relative value, okay, I don't typically charge by the hour. My retail hourly rate is $7.65 an hour. So you can start figuring out, right, come to that call prepared, and it's only because you're working with Bill and Deanna.
Mic drop. That's huge. Wow, that is amazing.
Great way.
AJ, thank you so much for giving back to our community. Everyone listening today, let's give a round of applause for AJ. AJ,
thanks so much.
Thank you for giving back to our community so much. You are the best. We are so excited to have you speaking on our investor cruise in April. And if anyone wants to get a hold of AJ, we will be dropping his contact here so you guys can make that call, chat with him, have him in your arsenal of team of people that you should be working with and giving to your clients so that you can be the best at what you do. So AJ, again, thank you so much for joining us today.
My pleasure. Thanks so much.